All right, so today I want to take a look at the Euro USD macro chart. I figured I'd do a video touching on a different trading pair than Bitcoin USD. And for me personally, the next thing I'm closest to is the Euro USD. I like trading Euro just because it's the most liquid asset in the entire, out of any trading pair you could choose in the entire world. Euro USD is the most liquid pair, meaning it has the highest volume, the most liquidity, and the reason why that's important to me, I don't necessarily need the liquidity. I'm not trading with the kind of size that that could start to affect you on. But even if you're not trading with that size, you know, it's still it's still beneficial in the sense that the way I look at liquidity is I see it as the more liquid a market is, that's the same degree to which that market will play out technically and follow technical analysis to a greater degree, right? If you're trading low liquid markets, you can create a trading idea and be right on the trading idea, but the volatility is such that you get taken out of your position prior to the market going in the direction that you identified. um, but anyway, just refocusing on this Euro USD chart. Basically, I have this level identified kind of from the March 2020, COVID Black Swan event. You can see here, it's pretty clearly defined expansion of volatility. So you see kind of a little bit of an orderly downtrend established here, right? Prices just kind of marching down from early 2018 all the way to 2020 on Euro. And then you get this very, very rapid expansion, right? So uh, when COVID happens, Euro breaks, it creates higher highs, lower lows, and then higher highs again. So that's the type of whip around behavior you see when you get a pickup in volatility around a high level. It's only that this is like very unusual because it's a macro time frame. So to see that type of price characteristic on a weekly chart is very, very unusual, and it's very significant as well. So if I see that, I'm going to be looking at these lows with a little bit greater deal of significance than sort of looking at some of the lows up here or up here. It's just the way I categorize that type of information in the market. And essentially, I'm kind of looking at this as the macro swing, and I'm seeing that price is coming back to that level, that macro low set in by the Black Swan event. And now I'm starting to keep an eye out for what price is doing around this level. And so if I go down to the daily time frame, I can see on the daily that price made higher highs. It traded above these highs on March 10th, just making slightly higher highs. Um, Now it didn't close above, but it did break these highs up here. So you could mark off something like this. If you were trading this, it would have gave you two great opportunities. Um, you don't really see that often. Anyway, if we go down to a 4 hour chart, you can kind of see this macro level a little bit more clearly. Yeah, you can kind of see, as we came down, hit that macro level, then we're sort of rallying off it. And, this is what I look for. This is a very important point. So let me go back to the weekly chart right here. Mark this level off that we hit. Maybe you're identifying it as a point of release uh, somewhere in this level, but we'll just use the the beginning of the impulsive move up out of this compressed volatility. So anyway, we've got that market that marked off at 1.09. Now let's go down to the 4 hour. So you can kind of see that price came down at this level 1.09 roughly. Again, it's a macro chart, so it did trade a little bit below, but you can see price hit it, rallied up, retraced, and this is where I start to look at price. I, this is another very important point. So if price comes down to a support level like this, a macro support level, it's not going to react exactly off the level. right? It's not a precise line in the sand. It's more of a general region where you're looking at, and you're kind of you're aware that it's a decent region to take a trade in. But so you're kind of on the lookout in that area for some type of reversal pattern, right, to play out. And then you kind of see that happening, right? So you go to this region, and then you see start to kind of market structure starts to shift around a little bit right here. It takes out this high, and then it stops creating lower lows, starts creating higher highs, and then starts defending the lows. So that that I would look at that, and I would consider that a market structure shift. And then as time goes on, you can kind of see that there's multiple price swings, but in general on the intermediate time frames, it hits that level, and then the buyers step into the market, right? They step in, they're creating higher highs, and we're still in that mode where we're creating higher highs. Uh, the swing I would be looking at on the intermediate time frames is this swing right here. Kind of came down off that level, hit the 618. You could operate off that. Now, if we go down to a 15-minute chart, you can kind of see that price will oscillate around this level for a while. It doesn't have to react immediately, but you can kind of see how price comes down here and hits these levels, and then the lower time frames react. And you see the same pattern that we saw on the macro chart playing out on the 15-minute chart as it hits a 4-hour level. So this is like kind of compounding the time frames on top of each other, but you see the same reaction here, right? It starts taking out the highs, rallies up, retraces, holds the lows just barely. But if you had to stop there, you held, and you're still in a position where you are in a position to benefit from what's going on in the market. Now, ultimately on the weekly, this swing can break. There's no guarantee that it will hold. But when you're looking at something like this, it's hard to be favored to the downside on this. Especially considering that how far prices traveled before really any of a relief rally. I mean, all the way, since May 2021, you basically had essentially no relief rallies. It's really hard to say there's even a lower high on the weekly because price couldn't even mount a rally, with the exception of this January, uh, you know, 20 January 2022 candle that just rallied up. Probably a little bit of a short squeeze. It's not a weekly sustained rally. So I guess another way to describe this is, people would look at this and be like, wow, this is a really a strong uptrend, or sorry, downtrend. But, I wouldn't really be looking at it that way. I would look at this as like, a little bit of exhaustion, right? It moves so impulsively into this massive macro level that really the most likely scenario is a relief rally, whether you're bearish or bullish, you know? And but I don't want to get ahead of myself and predict what it will do after that relief rally. I'm just keeping an eye out for that. I'm already starting to see the signs that the market's starting to shift around, show a willingness that it's willing to do that. So that's kind of what I'm operating within, and the understanding I'm operating within. And if I see something different in the market, then I'll shift my plans accordingly. But right now, that's kind of how I'm seeing the Euro USD chart. And I think in the future I'm going to start trading the Euro USD as well, and I'll create a trading journal series alongside the Bitcoin trading journal series that I've been uploading recently. So if you like that kind of content, just give this video a like, and make sure to subscribe to the channel, and keep an eye out for that Euro USD playlist.